think silver could go, or where should it be? Let's look at where it should be, looking back 3,500 years and an average of 15-1 in the ratio. Well, it's very simple. You take the price of gold, 2,700 or thereabouts, and you get $180 silver. So triple digit silver is, in my opinion, a possibility. It will come to a point where all that paper that's created on the Lbma will not suffice. People want the physical, and there will be a point where it flips. Everything flips, and price discovery finally will take place. And that's why I think triple-digit silver is possible.
Join our WhatsApp channel for real-time updates, breaking news, and expert predictions on gold, silver, and financial markets. Link in the description or pinned comment. Stay ahead of the curve. Don't miss out.
Back to silver. I recently spoke to the Gnome of Zurich, and he's given me some charts about the gold-silver ratio and other charts as well. But this is the one that really is amazing. It's a 3,500 year chart. And you can see that up until the late 1800s, the price of, the gold-silver ratio was averaged around 15, roughly, for over 3,000 years. And since the late 1800s or around 1870, that's all changed. So this is an aberration here. And I think it's not going to last forever, because we are at a point where the supply of silver is dwindling. The fact that silver is so cheap, we're almost at 89, the gold-silver ratio right now, makes it uneconomic to recycle silver. So the only way to replenish the supply of silver, be it for industrial use or investment monetary use, is for the price to go higher. And I think, as this says here, hashtag triple digit silver is very much a possibility. Yes, Andy gave that to me. It's from Miles Franklin. And where do I think silver could go, or where should it be? Let's look at where it should be, looking back 3,500 years and an average of 15-1 in the ratio. Well, it's very simple. You take the price of gold, 2,700 or thereabouts, and you get $180 silver. So triple digit silver is, in my opinion, a possibility. And I've spoken, of course, a few times in the last few months to David Jensen, who does great research about the Lbma in London. And I think the Lbma, the London Bullion Market Association, is the key to the silver price suppression. Yes, COMEX is part of it as well, but it's in London where the bullion banks are able to rehypothecate or create an endless supply of silver, which is, in my opinion, fraudulent. But how do they get away with it? Well, David Jensen explained that with the Big Bang in 1986, that was when the Thatcher government deregulated the financial system in the city of London, and it led to a huge growth in the city of London. I benefited from the Big Bang. I came here in 1992 and I worked in the financial markets, but the Big Bang, they gave the bullion banks basically carte blanche. They made it so that they would self-regulate. So there is no regulation. It's just like a Wild West, the London Bullion Market Association. And the Bank of England just turns a blind eye to it. Yes, the Bank of England is part of this Lbma mechanism, even though they don't officially belong to the Lbma. The physical silver is kept, a lot of it is kept in London. With the world becoming more and more divided, with the globalization that we saw from like the early 2000s up until 2020, with that like gone out the door, with the multipolar world, the BRICS challenge, and also the talk of trade wars with the new Trump administration, it's going to get harder and harder to get not just all natural resources, but also especially silver. There's even talk that the Trump administration could put a 10% tariff on silver and gold. That normally should raise the price by 10%. Of course, 10% is not that much in the scheme of things. But the other important point about this multipolar world is that countries like India and China, they are using silver for industrial use, and they're consuming silver in massive amounts. And it will come to a point where all that paper that's created on the Lbma will not suffice. People want the physical, and there will be a point where that it flips. Everything flips, and price discovery finally will take place. And that's why I think triple-digit silver is possible. What we've had since the great crime of 1873, when the United States demonetized silver, is an aberration, as I showed you on this chart here. Because for the last 3,000 years, the gold-to-silver ratio, or the price of gold and silver, is been below 20. Right now, it's at 89. So it's not normal. That's why I think silver is a steal right now.
Substantial things coming for gold. Something just happened that really caught my attention. So we've always talked about JP Morgan's role in suppressing metals and how they paid a $920 million fine for manipulating the metals market, right? And they were the custodian and still are the custodian of the world's largest silver trust, SLV. So here it is, a company that admits to manipulating the market. Their head trader, Michael Nowak, who I've met before, is still in prison for manipulating the silver market. And they're allowed to continue to be the custodian of the world's largest silver trust. And then we would always, obviously, people would say, do you think gold will be confiscated again? And I would always say, well, to me, it wouldn't do them any good to confiscate the gold. It would be better to confiscate the ETFs. I've said that on 500 podcasts.
With gold prices on a sharp rise, 2025 is expected to be another significant year for the precious metals industry. Miles Franklin CEO Andy Schectman believes that despite sporadic turbulence, the gold market is set to grow even stronger. Analysts see the $3,000 figure as a possible aim, given that gold has already increased by about 30% this year. Gold prices remained steady at $2,665 during Wednesday's trading session, encountering little resistance but exhibiting tenacity in the face of global economic uncertainty. The possibility of central banks reintroducing quantitative easing in response to financial strain brought on by high interest rates and the possibility of additional banking sector instability, which could increase demand for safe haven assets, are the two main factors that Schectman identifies as driving gold's continued rise. As central banks and monetary policy remain in sharp focus, investors are closely watching the Federal Reserve for any clues about future rate decisions. Don't miss out. Hit the subscribe button, turn on notifications, and join us for expert analysis on what's ahead for gold and the broader financial markets.
People put too much attention onto what the Federal Reserve is or isn't doing with their interest rates. Goldman Sachs kind of backpedaled on their $3,000 gold here this year because, the Fed may not lower rates because inflation's reemerging and means nothing. Ultimately, we'll see the price continue to move higher. It moved up 30% this year. It's averaging 9.9%. So even using 9.9% from where we are at 2650, that puts us at 3,000, pretty dang close to it anyway. But look, I think one of the things that I would be concerned about, one of the things that I think could, or several of the things that I think could ignite that fuse. Let's start with the banking or financial crisis. Things that are very systemic in the financial system. And I think that's one of the things that could ignite that type of an event. And I would bet dollars to donuts that we will see many more banking failures in 2025. Will they be like Bank of Lindsay, Oklahoma, which was the first bail-in, and yet no one talked about it, but I did. I screamed about it. But where was CNN and Bloomberg and Fox and all of the so-called media pundits? Those folks lost half of their uninsured deposits and they're not getting them back. And so that's an interesting thing. I think that aggressive monetary easing. So the central banks may need to implement large scale quantitative easing again, right? Because interest rates are increasing, and that will destroy the banks, and that will destroy the market. That's why Trump wants low rates, also to make money easier and stimulate the economy. But you saw what's happened. The Fed lowered the rates on the front end by 100 basis points. In the back end, the 10-year Treasury went up by at least that much, if not more, signaling, no, this ain't going to be easy. We will not take any duration Treasuries. The bond vigilantes won't, unless the rate goes higher. Ultimately, the rate goes higher, but I could see them quantitatively easing to drive down the rates, and then also yield curve control, where they're buying the back end of the bond market because no one's stupid enough to do it, creating a very big problem in the bond market. But nonetheless, I think they want to increase liquidity and debase the currencies. All of them do, to make paying off this debt easier, which leads to high inflation above expectations. I think this will drive investors back to gold and silver as inflation hedges, is the realization that the Fed has already waved a white flag to inflation. They're 65% away from their target rate based upon the Fugazi numbers that they use, which, the CPI is a CP lie. It's way off base from what real inflation is, and they continue to massage and change it. In April of last year, coffee was up 85%, so they replaced it with tea. That's what they do. It's a big and total lie. It excludes food, energy, and housing, the things that are going up in value. It's a huge lie because everything is based off of this hidden inflationary agenda. But I think you will see the realization that, look, if the Fed was if why are they lowering rates on the front end of the curve if they're still 65% away from their target, even using the fake numbers? So you're driving across the country from California to New York, and you decide to stop in Omaha because, well, that's far enough. We've won. We're there. We still have 65% of the way to go, but it's good enough. We'll call Omaha the new New York City. I mean, that's really what it is. And I guess the last thing I'd say is a continued dollar weakness, or what they want. The dollar's been going straight up, not what they want, but they want a decline in the U.S. dollar relative to other currencies. That's what Trump is talking about. He doesn't have the power to do it, but he is talking about it. That's what he wants. And if they were to manufacture somehow, whether it be through quantitative easing and inflation, a lower dollar, which hurts in other areas because that pushes pressure up on interest rates, it's a sticky wicket they find themselves in, but that would also support higher precious metals prices. So